SoftTech VC. We're a micro VC fund investing in early stage consumer web and mobile companies. And we do about 1 to 2 investments a month, average check size around 400K, just to give you some perspective on the type of market we look at. And yeah, I work with Jeff Clavier and Charles Hudson. So today I'm going to be talking about market sizing and competitive landscape. So at SoftTech, we have something called the 3 S's rule. And you can read more about it in Do More Faster. Jeff Clavier actually wrote a chapter on it. It's also on our website. But it's a really simple way to talk about something I'm pretty sure you've already heard several times today, which is the 3 things investors primarily look for, particularly in early stage companies: smart-ass team, kick-ass product, and a big-ass market. And today my presentation is going to focus on the 3rd piece, which is the big-ass market. We always say that the smart-ass team is the most important after the kick-ass product and then the big-ass market. But the reality is, unless your market is there, we really can't get there with the team or the product. So you have to have a big enough market. So really quickly, how big is big enough? So a couple quick stress tests you can do. Are you building a company and not a feature? I think that's one of the most important things you can ask yourself. Are you part of a larger product and a larger company, or are you just a widget within that vision? So you should ask yourself how your company gets to $100 million in revenue in the next, say, 3 to 5 years. And if you're doing 10% of a $1 billion market, you can get there. If you're going after a $200 million market, you're going to have to get 50% of that market, and that's not a very realistic thing. So another good kind of gut check for you, because this is really what's going to get you kind of larger and larger pieces of the game. So reality is you really need to be looking at a market that is greater than $1 billion. And by raising capital, whether you're doing it early on or later, you're really committing to matching the return expectations of the investors who are backing you. So, we have the expectation as seed investors that eventually you will get to that 100 million in run rate, right? And so, again, because of that, even though we're seed investors, we still need that $1 billion market opportunity. Okay, so very quickly, there's 3 types of markets, essentially, that you can be going after. I'm sure many of you have probably seen this before. You can either be building a product for an existing market. So it's a market that's already out, a market that already is out there. And what you're bringing to the market is sort of a better mousetrap. You're bringing something that's better, faster, maybe cheaper. Generally, these markets are crowded. Generally, there's a lot of existing players in the market, incumbents, who potentially have deep pockets. It doesn't mean that you can't do this, but they're more challenging markets to tackle because there's already expectations set out there in the marketplace. The second thing you go after is the resegmented market. So there could be some fundamental shifts going on in a particular market that you can take advantage of. There could be niches that people haven't actually carved out within that market, which, while they are niches, could still be billion-plus opportunities. And so by resegmenting and rethinking a market, you may be able to find more opportunity for yourself. And sort of the 3rd market is the new market, the brave new world. It's the thing that didn't exist 2, 3 years ago, where, quite frankly, these are hard to size, and we'll talk about that in a second. So ask yourself which one of these things you are. And we'll talk about competition a little later today, but the reality is understanding where you fit within each of these 3 market types will really help you understand how to examine the competition, current, past, and then future. Okay, so market analysis 101. So the first thing you want to do is define the problem you're going after. What is the underlying need for the consumer that you're actually solving? And I think a lot of times teams go and start building these solutions, but they don't actually understand the need behind them. And part of that is really identifying what your customers look like. So who are the people that are actually going to be using the product? And how are you helping to do something today or in the future that they weren't able to do as well or at all in the past? The other thing I think that's important to consider is, are your users also your buyers? Who's actually paying for the product? This is particularly the case when you talk about enterprise solutions. So if you're building something for the enterprise, the person in the enterprise that's using your product is actually very different than the person who's making the buying decision about your product. So when you consider the market opportunity, you want to think about who are the people that are driving that opportunity within the market and who are actually making those purchases. So we're going to go through kind of an exercise in this on the next slide, just really quickly. Essentially what you want to be working for as you think about the opportunity you're building your business around and how you're going to talk about the size of that opportunity to potential investors is the addressable market that you're going after. So this is the number of customers you potentially can have and the lifetime value of those customers. So you want to make sure you're going after the relevant market, so not just well, we'll talk about the next slide, what's relevant versus irrelevant. What share you expect to get, it's not 100%. You're probably not going to have cornered the entire market. So realistically speaking, what do you think you can achieve in the market you're going after? And then what's the growth and overall market potential of the opportunity? Because you could start with a market that's, say, less than $1 billion today, but it's right at the verge of taking off. And potentially it's something that the investors that you're talking to can also get behind because they realize today it might be a $500 million opportunity, but guess what? 5 years from now, it's going to be a $10 billion opportunity. So that's something you also want to consider is what the growth trajectory for that market looks like. And having a really good case that you can build around that is helpful. So, as I mentioned, size matters of the market, but there's other things that matter too. You shouldn't be overlooking the competition, so what the competitive landscape looks like and how you potentially stack up against them. The monetization potential, and this is, are customers frankly willing to pay for your product? And if customers are willing to pay, who is the customer that's paying versus who is the person that's using the product? What the growth of the market looks like, as I said earlier. And then finally, timing. I mean, when are you entering this market? Are you entering this market when it's on the uptrend and pretty much anybody who goes in is going to be able to capture some share? Or are you entering a market a little late? Or are you frankly too early? Consumers aren't ready to use your product. And there's tons of examples we can point to where, companies were out there in the marketplace, but they weren't actually ready. Consumers weren't actually ready to use those products. And then 2 years later, competitor launches and just takes the market. Okay, so very practically speaking, and I think this is hopefully going to be useful, there's two ways you can size a market. There's the top-down approach and the bottom-up approach. The top-down approach is one where you're really relying on industry analysts' expectations, predictions, market data, census data. It's all the data out there that you can pull about your market. So let's say you're going to be building an internet company in children's clothing. So you start with like the total apparel market of the US. And let's say we're focused on the US market. So that's not the market size that you're actually going after with your children's online apparel company. That's just the base number. Then you want to whittle that down, and you're going to break it down into the appropriate subsegments. So product category, geography, vertical, sales channel, what customer you're targeting. So in this case, we've broken it down a little further to total kids apparel market, which is a subset of the overall apparel market. And then finally, you get down to your addressable market. So what's the opportunity online? And this potentially could be small today, but it could be growing because dollars are shifting online, and perhaps the children's market in general is actually growing faster than the overall online market. But the important thing is your addressable market is not total apparel or total kids. It's total kids online if your business is focused online today. So the addressable market you're going after is really, if you were to capture 100% of that realistic market out there, that's the size of the market you're actually going after. And I should just kind of mention that, like, a lot of times you'll see, like I'll look at companies and say the education space, and somebody will tell me, well, blah blah blah, like there's $500 billion spent on education. The education market. Well, what percentage is actually spent on tutoring if you're doing a tutoring company versus what percentage is spent on moving textbooks online? So understanding where you fall is really, really important because, frankly, you show me you've got a $100 billion market, the first thing I'm going to do is call bullshit on those numbers. And I'm going to want to dive deeper. Okay, so the more kind of accurate way to do this and a good way to gut check yourself is to do the bottom-up approach. And if you don't do it, we will. So this is really where you're going to identify sort of a number of factors related to your product and the monetization around your potential product. So you start with, say, the number of potential customers out there. So in this case, it might be moms or households with kids and knowing the number of kids in the household, right? And then you estimate the revenue per user per year. So fairly straightforward. But the most important thing I think you can take from this is you want to compare that top-down number to that bottom-up number. And they might not match exactly, but if they're off by a factor of 10, you've got a problem. If one is like 100 million and one's a billion, go back to the drawing board and really examine how realistic the numbers you're looking at are. So I think that's an important gut check to do. And again, like I said, investors will kind of take a look at both numbers. Most of the time, I don't see a lot of early seed stage companies present me with the bottom-up approach. I'll do those like rough back of the envelope estimations myself, and if they don't kind of match, then there's usually a problem. Granted, a lot of your early stage companies probably don't know how much revenue you're going to make per customer per year, but you can make some realistic projections, right? You may have a little bit of data in the market about what people typically spend on a particular type of product, or you may say it's reasonable to say a customer might pay $10 a month for a value-added service, and if they did. So it's, we want to understand the assumptions behind it and get a feel for that. A couple tips when you're doing this. Okay, so if you're dealing with an existing market, sizing the market is a little easier. You know who your customers are, and you have a general understanding of what they're going after. You may know what typical price points are in the market. It also makes it easier for me. So, it means that I have data out there at my fingertips as well that I can pull on. So I'm less reliant on you giving me the numbers. You should still give them to me, but I'll be able to check the accuracy a lot better. And I mentioned that understand the market nuances and don't be careless. And I think that goes back to, let's say you're building an e-commerce company and you're doing affiliate sales, and your revenue is 5 or 8% of every transaction. So your market is kind of based around the number of transactions and the percent you're getting off of each of those transactions, not the overall market for the companies that you're actually selling the product for or being affiliate for. So understanding that and being able to kind of specifically hone in on that, I think, is very important. It's a little trickier when you're sizing new markets because, quite frankly, the customer is potentially unknown. You may know a little bit. You've done some customer development. And the customer's behavior is unknown, too. So the best factors to kind of look for are what are the emerging macro trends in the market? And quite frankly, you're building a company in this space. So I would assume that if you're building a company in a new market, you have a pretty good feel as to how you think that space is going to evolve. And you can point to some early trends that kind of suggest that. And you can look to previous markets that have kind of evolved over time and looked at growth rates there, too, and kind of make some general predictions. You're going to have to assume what the adoption rates are going to be, and you know that the new markets are actually going to grow a lot slower, potentially, than existing markets because you've got early adopters, you've got the lag time. And again, I can't say it enough, timing really matters. If you are too early, it's going to be a slow road. If you are a little bit too late, it's going to be crowded. So again, with these new markets, making sure you're timed right, and that's not an easy thing to do, plays really a lot into how you're able to size these. So basically, the way I would say you're sizing your kind of new markets is it's a lot of creativity, some basic algebra, and a bunch of educated guesses. And pretty much the number is bullshit. But quite frankly, what you're doing is you're showing me that this is how I think about the space. And I'm not just throwing a number out there. I'm actually throwing a number out there with some thought behind it. And let's take a deeper dive into how I got to this number and have a conversation about it. So, just like when I see financial projections 5 years out, I know those numbers are bullshit, but quite frankly, they show me that you at least can make financial projections and you have a good feel for, what your business could potentially look like, even though it won't look like that. Okay, so mentioned these a little earlier, but sort of the final takeaway is don't forget market growth. How is your market growing? What's it look like in 5 years? Is it not growing? Is the growth slowing? Is it something that's taking off like a rocket ship? Are dollars shifting from one sales channel to another? Mobile is a great category for this right now. I mean, everybody's talking about mobile commerce these days, right? And so we're seeing tons of dollars shifting onto mobile, but it's still really, really early. And so there's a market with some potential opportunity there. The other thing you want to kind of consider is how realistic is sort of that growth relative to the entire market. So if, let's say I'm going to tell you that an industry is going to double or triple over time, over the next 5 years, and you look at the overall category, and let's take luxury retail, for example, and if dollars are moving online in luxury retail, and it's going from 1 billion to 10 billion in the next 5 to 10 years, and the total category is a $20 billion category, are half of the sales actually going to move offline to online? Maybe they won't. So looking at the number that you're predicting and the growth number relative to the larger market, that we looked at in the earlier slide, is important as well. So again, you just want to kind of constantly ask yourself, like, does this make sense? Market share. So how much can you realistically capture? Again, you're not getting 100% of a market pretty much ever. So you can do the math. In 5 years, if you have 1% of $1 billion, that's not a very big market. That's not a very big market share for you. You're only making 10 million in run rate. It's not big enough. You get 10% of that market, you're 100 million. So what is reasonable to expect given the competitive landscape, given what your product offering is, given how the market is shaking out, that you can achieve in a market? And finally, market value is also important, and this goes back to that, like, are you doing affiliate sales? Are you selling your own product? Gross versus net. Gross is when you're selling your own product. Net is when you're selling other people's products. And so because of that, you're kind of shaving some of the, you've got your gross revenue versus your net revenue. And I care more about net revenue when I'm looking at companies that aren't selling their own products. So that's also important. How do I get you to gross and net run rates? Okay, so that's market sizing. Let's talk a little about competitive landscape. So how many of you have a slide that looks like this? Kind of amazing. Like, your product's awesome, isn't it? And you probably have a slide that looks like this. So you can build these slides. These slides are really helpful sometimes. But how do you even go about building these slides or slides that might be more helpful than this? So that's what we're going to talk about. When you think about competitive landscape, you're really talking about your startup in the context of the broader world. So what does your startup look like in the environment in which it operates, including the partners that it works with, the people that it competes with, and I put the future competition, the people that keep you up at night, and do you think these large players are moving into your space? And when you think about competitive landscape, you're thinking about all of this stuff. It's not just who do I directly compete with today. And the more you know about this, and the more you can talk about the uniqueness about your company within this entire arching landscape, the better off you are, I think, with investors. So really quickly, competitive landscape. Start by we'll take a look at the macro business environment. The next thing we're going to do quickly is I'll take you through the classic SWOT analysis. Very, very business schooly, but can still be very helpful. We'll look at how you view the competition, and then we'll talk a little bit about competitive advantages. And then I'll share a little bit of perspective about sort of what we say and what we actually mean when we talk about competition with the companies we meet with. So competitive landscape, the first thing you want to do is you want to think about the macro trends going on in the environment in which you're operating. So some of them are regulatory. What sort of legislation is going on that's going to impact your ability to launch product, your ability to continue to grow your business, or potentially that's going to open up a new opportunity for your business because of this new legislation. So understanding that is important. Economic and political shifts. So certainly if you're operating outside of U.S. markets, incredibly important. But just in general, are we going through an economic downturn, and are consumers watching their pockets more, and are discounts and sales, and is that more important versus are we free spending right now, and actually there's more opportunity to kind of sell luxury goods, right? There's cultural and social shifts too that I think a lot of times are sometimes overlooked in pitches that can be very important. So if we're seeing trending of more households having two parents working, or conversely more people working sort of flexible hours, what does that mean sort of for your product? What does it mean if people are looking for additional work outside of the normal working hours? And then obviously technological innovation that's going on that would impact sort of overall sort of the entire market. So mobile's another great example there. Next is to understand the industry ecosystem. So who are all of the partners sort of surrounding you and your company? So clearly that's the competitors. It's people you compete with directly, who you absolutely know and you're kind of following in a sense their every move. It's also the people you compete with indirectly, so your customers can spend dollars with you, or perhaps they can spend dollars elsewhere with these people. And then it's potential entrants, and this is the whole, when's Google going to do this question? It's also the suppliers and partners that are out there. So how they help you, how they provide new distribution channels for you, how they potentially help market you to customers, what sort of validity they offer to your product as you're launching something new. substitutes, so alternatives to what you're doing, and then the customers themselves, and understanding sort of where customers are moving, where they're spending, that type of thing. Okay, so quick quiz. Are any of your companies in spaces that are considered pretty crowded? I would imagine, so if you're doing a play in dating, travel, ad tech, okay. Are your companies fairly complex? Or is the industry that they're operating in fairly complex? And finally, is it scary to investors? This one, the one that comes up a lot, that I work down the hall from an education incubator space, and a lot of times there's a lot of investors say, oh, we don't invest in education technology. It's a scary space to a lot of investors. It's something where there's a lot of preconceived notions, and it's tough to sometimes jump in there. And so anytime you've got these markets that are really complex, really unknown, there's a big opportunity for you to make an ecosystem fun. And I love these, and I don't see them very often, but I think this is a great way to demonstrate to the people that you talk to, whether it's potential partners or investors, that you understand the depth of what's going on in your industry, and you know where you fit within that entire depth. So it's not, I'm competing directly with these people, it's, this is what this entire landscape looks like. Like if I was gonna take education, like the education market, you've got people that target colleges, you've got people that target, primary and secondary schools, you've got folks focused on in the classroom versus alternatives to being in the classroom. And so sometimes it's very easy for me to say, oh, well, I saw a company that's a platform for educators, 2 days ago. Well, you may be actually going after very different spaces in that market, but sometimes having sort of a map of what that looks like can be very helpful. So I like to think of these as sort of maps, and you have a certain space in that map as to where you fit, and that can really help me kind of get a feel for where you play, and who works for you and who works against you and who can help you. Okay. So reviewing the competition, the first thing you want to do is you want to start with identifying who those people are. So it's the people that you compete with directly. It's the indirect competition, sort of the alternatives, the substitutes, people that kind of play on that space but maybe not directly. And then people who in the future are going to be there. So it could be, there's a lot of, subscription commerce plays out there today, right? And you look at people that are doing plays around children. And so you've got some that are doing activities for children. You've got some that are doing goods for mom and some that are doing clothing. Could any of those companies potentially move across and move their customers and begin to offer sort of other boxes that infringe on your territory? Sure, they could. Could, in theory, Facebook or Google, build a box? Maybe. So it's identifying, realistically speaking, though, who you think that competition is. And then you begin to analyze them, and this goes back to that grid we saw in the beginning. You choose the slots, but be realistic. Choose slots that actually make sense for your business and tell a story. It's okay that some other people offer the same features as you, but if they do something slightly different. So you're going to talk about what product features you have, who your customers are, market share of the competition, if you kind of know that or can estimate it. Where you sell is important. What's your distribution strategy? Whatever technology differentiation you or your competitors may have, what your pricing looks like, how your pricing is modeled. Are you freemium, or you pay for download, or are you paying within the app? And then the other thing I think that's really, really important here is resources. And maybe this doesn't go on your slide, but you really want to know, especially as you're in a relatively new market, you are maybe have a couple other competitors that are still early. Who's well-funded in that market? Because the first thing that's going to happen when you come in is, I see you doing something in a space that I know someone got funded in last week, and they have deep pockets. And the question for me isn't, are you the right play? The question is, how deep are the pockets that your competitor has? And how difficult is it going to be for me, as you begin to grow, to find other investors that I can kind of bring into the round later on if all of the big names that I expect to kind of invest in your company already did a deal with your competitor? That's really important to think about. And so you want to have a clear story as to why you're different and who you potentially might go out to at later stages. I focus on a lot of next generation commerce stuff, and this is a big concern for us. We see a lot of early companies kind of emerging in the space right now. And if I know that, so-and-so later stage fund is backed a company in your space, they're probably not someone I can take your company to when I'm looking to help you raise your Series A. And so I need to be aware that there's other people out there that are going to look at the space. And one thing those people are going to do is they're going to say, well, this company is well-funded and has deep pockets. How do we compete against them? So it's important for you to be aware of the funding of the people that you're competing with most closely. And to know who out there can potentially fund you and would be interested in funding you. And then you also just want to kind of consider the macro implications again here. So you may have some entrenched competitors, but there could be changing trends, and because of the way that your distribution is different, or the way that you kind of changed your pricing model may actually adhere to a larger market trend, which somebody may have giant share today, but you're kind of an early entrant that can kind of come in and take over. So, just because somebody's got a check on a box doesn't mean that you can't come in and there's not opportunity for you. And I think, again, it's important to kind of talk about what those macro factors are that impact that. So this is the sort of traditional SWOT analysis. So you've got your strengths, your weaknesses, your opportunities, and your threats for your company. So strengths are why you and your team and your product kicks ass. So you'll notice that they're basically the same as the potential weaknesses. So what you want to do is this is an exercise you do. You don't put this in a slide deck, but it's a way for you to sit down and take a look at everything about your company and kind of map yourself out. Like, where are we already strong? Where do we suck? Where could we be really good if something changes or as we grow? And then finally, threats is why we might run into problems. And being realistic about sort of where you are, and then identifying the weaknesses and the threats and figuring out how you move them into opportunities and strengths is really important. But you wouldn't put that in a slide deck. It's more for you internally. Competitive advantage. So the first thing is barriers to entry. What are you doing that kind of prevents the competition from moving in on you? Classic example of this is switching cost. So once I get you on my platform, it's really hard for you to leave. Network effects of having lots of people on a platform, I really can't. It's harder for me to switch. Ideally, what you're looking to do as you think about competitive advantage is to build for the long term. So you're going to continuously be improving on your product. And the faster you can kind of iterate on the customer development that you do and how you put that into your product and make those changes in the market so you're staying ahead. There will always be someone else who, if there's really opportunity in the market you're going after, will try to go after that market as well. So you need to run faster, but you need to run faster, smarter too. And then finally, this is kind of an interesting one, but don't obsess about the competition. A little bit of competition is healthy, especially if you're kind of playing in a market that's new, that you think there's opportunity in, and you look at it and you say, shit, we've got our first competitor. Well, that's actually not necessarily bad. It means that there's probably something there. It also keeps you on your toes. It should kind of light a fire under you to kind of continue to move faster. But the most important thing for you to do always is really focus on the customer. So your competition is certainly important. Know what they're doing. Be aware of what you think they might do. Be one step ahead of them. But the reality is, you know who your customer is. Focus on what's important to them. And if you're true to your customer and you can grow those customers into more customers, then you have a leg up on the competition. Okay, so this is sort of the last slide here. But so when you're in a meeting, if you don't put the competitive slide in, probably I'll ask you, who do you compete with today? I'm really asking you, how are you different from the 15, 20 other companies in your space that I've seen in the last 2 weeks? So if you don't know who the competition is, figure it out, because I do, because I've seen your competition. Most likely, I talked to your competition yesterday. So you're better off telling me who your competition is before I know about them, or before I have to go find them, or if I know about them, don't hide them, because I do know about them. And being able to talk about how you're different than them is more important than the fact that you have them. it's okay that you have competition. I expect most companies to have competition. I want to know how you're different and how you're going to win. Who are you going to compete with tomorrow? This is what I'm asking you. When's Facebook going to do this? When's Google going to do this? When's Pinterest going to do this? Why aren't they doing this today? So again, you want to have a realistic outlook on sort of the big guys lurking in the corner. And this is silly to say Facebook, but if you've got a good one with kind of subscription commerce in general is Amazon's sort of the giant gorilla in the room, right? And so would Amazon do this? Could Amazon do this? Maybe not. And maybe they can't do it as well as you, but you've got to be able to tell me why. And that's important, because at the end of the day, when there's big people with big pockets, I'm going to go back to thinking, how do you compete against those people? How do you stay under the radar long enough? How do you potentially work with those people? I'd like to understand how you're different. What is your competitive advantage? This means I probably wasn't paying attention when you're talking about your market. I don't know much about it, and I was on my iPhone, so would you just repeat that a little bit again for me and go into more detail? So really, again, you know more about your market than I do, I hope. And I'm actually looking to you, if I'm going to back you, to be an expert in the market that you're going after. So be an expert in that market and help me be an expert in that market. The more details you can give me and the more you can kind of demonstrate in a smart way that what you're building in your market makes sense, then great. It's okay that you have competition. Finally, so-and-so just raised $50 million from these 10 firms. How are you differentiated? And you will hear this a lot. And what I'm saying is your competition has deep pockets. How are we going to get the next level of investors excited and on board with this opportunity? So what are you doing that's different from your competition? What do you think they're going to do with this money? How is what you're going to do with the seed investment I'm giving you going to separate you from this or allow you to kind of do something different that when we take you out to raise a later round, that you're actually going to have people that are going to want to back you too, and not these 10 firms that these guys already raised from. So, seed stage investors, but later stage investors too, we think about sort of the long-term trajectory of your company and what funding looks like, later on if you do begin to succeed. And so you understanding who's funded, what they have, and how you're different is also important. Okay, so that's it. You can find me at the SoftTech website. It's my blog, and that's me on Twitter. So are you doing questions now, or are we doing questions after Chris? Now? Okay. So any questions? Yeah.
What's sort of the top 5 things that make you roll your eyes and shut down when you're listening to somebody?
When I don't know what they do in the first 2 minutes of the conversation. Like, if you can't tell me in 30 seconds what you do, not to say you've lost me, but you kind of lost me. I actually taught, so I was teaching this class at Stanford to a bunch of high school kids with a friend of mine over the weekend, and we were teaching sort of how to take an idea and turn it into a business. At the very end of the class, we took the kids in like this 90-degree heat, and we jammed everybody into this elevator in this unair-conditioned building. And they literally each had, until the elevator got to the top floor, to tell me what the idea that they were going to launch was. And they had about 25 seconds to do it. And some of them were actually really, really good at it. And they all had fun doing it. But the reality is, like, you never know when you're going to be sitting next to someone on a plane, riding an elevator. I mean, I was looking at an apartment the other day. I'm, apartment hunting right now. It's not fun. And one of the guys that was looking at an apartment, kind of at the open house too, was wearing a Techstars sweatshirt. So I went up to him and I was like, "Hey, you're in Techstars. I'm a VC. Like, what's your company?" And he had a 30-second opportunity to tell me what he did. And then we ended up walking around and kind of fighting for apartments for the rest of the afternoon, which was funny. But so be able to say what you do in 30 seconds, be able to say what you do in 2 minutes, and you've got to get to the point. One of my other big pet peeves is when I don't know why you're doing this idea. So sometimes I sit there and I'm like, I look at the team and I look at the opportunity and I'm like, okay, you're really really successful entrepreneurs. Like, great, that's awesome, but I have no idea why you want to go after this. So I think the personal story behind what you're doing is actually really important, because the reality is, like, the stage where I invest, like, you've got to be passionate about what you're doing, because you're with an early team, you don't have a ton of resources early on. Like, what is going to keep you kind of continuing to go? And so understanding the backstory is important. I hate when I don't see a competitive slide or when you can't talk about the competition. Like, you have competition. Everybody has some competition. And then the other pet peeve I have, and I think we're a little different at SoftTech, but we're a little bit, I would say, more conservative in that we like to have an idea of how you might monetize. I don't need to know. I don't need to know how you're going to make money tomorrow, but I'd like you to put some thought into how you might potentially begin to earn money and who you earn money from, whether it's customers, advertisers, you know. So those are probably the biggest pet peeves I've got. Yeah.
How important is traction, and what forms of traction do you like to see? Like what?
Oh, that's a great question. So the question is, how important is traction, and what forms of traction do we like to see? So I think, so it depends on the stage, but let's just go with sort of the seed stage example. I'd say traction is fairly important, but traction doesn't mean that you have thousands or tens of thousands of customers using your product. Traction at the seed stage could be you've validated your product with some early customers, you've come back, you've made some changes, you've begun to kind of show me that you think you know what product, that if you put the product out in the market, that you can get people using it, you can potentially get someone interested in paying for it. Traction in consumer is very different than traction in enterprise. Like, traction in consumer is being able to acquire users and retain those users and get them to do something on a, you know, somewhat of a repeating basis. So if you're building an app, it's, you know, you're in the app so many times a week. It's making a purchase if you're an e-commerce company. How many times to purchase, how many times to the next purchase. If you're building an enterprise company, traction is probably signing up your first enterprise customer. Maybe they're even free, but they're willing to give you the time to use their product. So understanding sort of your market and what appropriate traction is in your market is important. It's pretty rare for sort of a fund like mine to invest without any sort of prototype and any sort of customers looking at something. The exceptions to that are a founder we might have backed before, which makes a difference because we actually have some belief in that particular founder. We have a personal working relationship with them. But you know, from time to time, we invest in pre-launch companies too. But again, there's been some sort of validation with the customer. Does that answer your question? In the back, in the blue shirt?
Yeah, so I often get a question, what prevents so-and-so to do the same product? They've got, you know, $200 million in the books and
Sure.
do whatever they want and build the same product in months. It's a really tough question because there's really nothing that prevents them from doing it if they wanted to.
I guess the question isn't really what prevents them from doing it. It's what makes you better at competing against them. So, you know, it's like, okay, so Amazon, let's use Amazon Prime as an example. Like, what prevents Amazon Prime from building a subscription service for any product? Well, maybe there's a lot of products that Amazon Prime can do better than anyone else. But the reality is you're in this niche market, and you've got a market where the consumer really cares about the product, and it's a product that would never sell in that the brand partners would never work with Amazon because of what it means to their brand. Or it's something where there's a certain amount of curation that's necessary or a certain feel, then maybe you can compete because you're different. So it's, yes, you're potentially big players can move into your market and try to go after the same customer. Maybe you can share the customer, maybe you can't. But one way or the other, how are you different from the approach they're going to take? The other answer to that is, like, at the end of the day, big companies are big companies, even if they feel like they're still startups, right? And so they move a little slower, so you're more nimble. You potentially have talented people that have a vision that, would be gone from a company that's now gotten to be thousands of people. So you really have to figure out, like, okay, guess what? Maybe my competition could do this, but I can compete against my competition because I can do these three things. And my insight in this market is that these three things are actually what matters to the customer. Yeah?
How much do you want to hear about sort of product roadmap or feature roadmap?
Oh, that's a good question. So how much do I want to hear about product roadmap and feature roadmap? I like to have an idea of where you're going with the product. Like, I guess a lot of the stuff I see is prototype or relatively early. Like, you might be launching something today, but your grand vision is a lot bigger. And I expect that. I expect that even in your seed round, you may not get to the grand vision. I love having those conversations because to me, that's the company I'm betting on in the long run. So what I want to understand is, what are you doing today? What does that get you in terms of traction to prove? And then when do you think you might begin to do this next thing, and what are the proof points you need to get there? The other reason roadmap is sort of important in a sense is looking at how much funding you're raising and the timeline in which you're using that funding. So a lot of times founders ask me, like, how much do I need to raise? We like to see at the seed stage about 18 months of runway, which means sit down there, figure out, like, milestone-wise, like what you need to achieve to, say, raise a Series A in 18 months. And then what do you need to build from a product standpoint to get there? What do you need from a customer traction standpoint to get there? Does that kind of answer the question? Any other questions?
What's the best startup pitch you've heard?
The best startup pitch I've heard. Oh gosh. So actually, I think the best pitches I hear are actually when I don't really get a pitch, when I just have a natural conversation. So I just led a deal a couple weeks ago with a founder who kind of casually met through a friend of a friend at South by, actually, which is kind of crazy because nobody meets companies at South by. And I got to know the founder. I actually didn't really know what the founder was working on until later. And when I got to know through getting to know the founder and then learning about the founder's idea, sort of the product and the vision for this company just completely clicked to me. So I think anytime I can see the person behind the idea and really get their vision, I think those are the best pitches I get. And they're interesting. I mean, those are conversations. It doesn't feel like work for anybody then, right? So I think the more you can kind of be sincere about that, the better.
So investors want a big market.
Yep.
Investors want entrepreneurs who are focused on a single product at a given time, often.
Yeah, not doing too much at once. Yeah, I mean, you're testing early on. You're testing. Yeah.
Yes. So do you have any
Go back to that market.
suggestions for a company that sees their first product as a step toward a bigger market?
Yeah.
Something presenting to VC.
Sure. I mean, I think it's important to kind of like. I actually like to show. So since they asked the slides, we want all three of these things again. Really, really important. You need to show me sort of the 3 steps that get you there. So, like, how do I put this? So, tomorrow you're going to be X, right? Like, your vision is to be this. But we know we can't get there today. So here's what we're building right now, and here's what we're going to build to prove out these 3 things, right? And then our plan is to begin to phase in sort of to the next phase of the company, and that's Y, and then Z is the ultimate goal, and here's the timing in which we think we're going to do it. I like if I kind of get the broad vision early on, and then you show me an actual product of what you're doing, but you have to tell me that this is just one piece of the puzzle and give me the kind of timeline. And I think a lot of that's conversational. I don't think that's all in a slide, which is why having sort of the milestones and what your company looks like is helpful. And that's, I mean, I see that a lot with like e-commerce companies. Again, going back to like what I look at all the time, it's like their vision today is like, you launch these companies, it's about acquiring customers, right? And it's about how do we figure out the marketing engine to acquire customers. And then later on, you can begin to do more specialized, interesting things with those customers. And so the companies begin to evolve. So is that?
Yeah, thanks.
I have a question in regards to like slide decks.
Yeah.
Usually, is there a certain length you like to?
Like, so, I mean, let's see. You probably need anywhere from 10 to 14 slides to do this correctly. Sometimes you only have like literally 3 minutes for a pitch if you're at a demo day, right? Versus you have an hour or half an hour when you sit down for an investor meeting. So you want to time your slide deck appropriately. You should have, like a lot of times, a pitch in front of a big room doesn't have as much detail on it, but a slide deck that you send someone should have more detail, because if that's my first level of filter. So I don't think it's a bad thing to have like a more detailed version that you send to people. Because, for example, at SoftTech, we get a lot of intros every week. We get a lot of inbound that don't come through referrals as well. The sort of first filter I've got on that stuff is looking at the materials you've sent me. And if I can't really get a grasp on what you're doing, and then it's really hard for me to get excited about getting to a meeting. So that level of the level of detail, like the 10 to 12, 14 slides should do it. It gives me enough information to have an idea of what you're doing without giving me the full story. Yeah, but like quite frankly, if you're doing a 5-minute pitch, 1 slide a minute. If you're kind of standing up for something like this. In the way back.
So every VC asks for a deck, or a lot of VCs will ask for a deck up front, and every advisor
Just
never sends
not
a deck.
send it.
and I saw that.
It's fair. It's really fair. I mean, at the end of the day, it's a trusting relationship, right? So if I don't know you or your company, and we don't have a really strong referral, I need to see something to know that we should have that conversation. So you have to trust me, though, and it's tough. You have to trust me that I won't share that information outside of my firm. It's a relationship, and it's a trust business. I mean, if I betray that trust, then that's a scar on me and my firm. So, you know.
I think as an entrepreneur, you're less worried about the trust and more worried about kind of stealing your own thunder by you looking through a deck that I'm not able to.
Yeah, so I mean, okay, so this one happens a lot. Like I sit down with founders a lot that actually think I spend a lot of time looking at their decks before the first meeting. And they're like, oh, you have the deck, like you know all about this. And I'm like, yeah, no, I don't know what you're doing. If I open the deck and it looks interesting and you get a meeting, like I don't look at the deck anymore. I don't have time to look at the deck anymore. I meet a lot of companies every week. I don't want to look at the deck. I want to hear what you have to say about the deck. So, yeah, and every investor is going to be different. I mean, like, I think it's SoftTech, we'd rather hear you talk than listen to ourselves talk. I ask a lot of questions in meetings. I interrupt a lot, but like, yeah, so don't be afraid. Don't go sending like your entire business plan and, you know, your model and everything else before you've met me. But once you meet me and we go further down the road and I ask for more information, definitely share that. But again, talk to other. The other thing too is if something feels off for you, just talk to other founders who have potentially talked to these investors, because founders talk, investors talk. We all kind of know what's going on, and so you should be able to get pointers from that. I think that's time for me. So thanks everyone. I appreciate it.